So we now proceed to the indirect method of a cash flow. So this indirect method, also known as reconciliation, an entity should convert net operating income or loss to the net cash provided or used by operating activities during the year, which means we should reconcile our net income to the net cash flow from operating activities. The purpose net operating income or loss figure is taken from the income statement and is adjusted for non-cash expenses, timing differences, and non-operating gains or losses. So we have here some three adjustments to reconcile our net income to the net cash flows from operating activities. So the first one here is we just take adjustments for the non-cash expenses. So non-cash expenses reduces the net operating income but do not affect the cash or will not reducing cash as well. So in the non-cash expenses will added back to the net operating income under the indirect method. So the main example of a non-cash expenses is the depreciation, right? So the depreciation are the decreased value of such assets like machineries, equipments, cars or vehicles, and etc. Depletion of natural resources, amortization of intangible assets, and other expenses illustrates the treatment of depreciation for operating activities section. While the purchase of depreciable asset is an investing activity, and the outflow of cash that occurs as a result of such purchase is reported under the investing activity section. So next is the adjustments for timing differences. So under the accrual basis of accounting, the revenue is recognized when it is earned and expenses are recognized when they are incurred or when the benefit is taken rather than the time the cash changes its hands. For example, when a bakery owner makes sales on account, the bakery owner should recognize it immediately rather than waiting for the time when the customer will make a payment. The bakery owner recognizes it by debiting accounts receivable account and crediting sales account. When a revenue is recorded without debiting cash, an asset is debited in place of cash, or when an expense is recorded without crediting cash, a liability is credited in place of cash. The accounts receivable is debited in place of cash on the event of a credit sale, so that the recognition of revenues and expenses without debiting or crediting cash account give rise to asset and liabilities. so that the changes in the balances of such assets and liabilities over the period represent the differences between the revenues and expenses recognized for income statement purpose and the net cash flows from operating activities. So the examples of accounts that create such timing differences include prepaid expenses, inventories, accounts receivable, accrued expenses payable, and accounts payable. Then last adjustments for the non-operating gains or losses. So here, the gains and losses resulting from non-operating activities are included in the income statement. Then, since these gains and losses are the result of non-operating activities, their effect is eliminated by adding any non-operating gain from the net operating income figure. Other examples of gains and losses that require a similar treatment are gains or losses on discontinued operation, which is ito yung mga operations na hindi natuloy, no? O naputol o nakansela. And the gains on early payment of debts and etc. So for example, no, Jack Rowell's company sells some of its old equipment like tablets, no, having a value of $1,200 for $1,500. So the original price of the tablet, no, was 1,200, and he wants to sell it from $1,500. So the gain, which is the amount of the price that he wants to sell, no, for the tablet, which is $1,500 minus the original price of that equipment, which is $1,200, having a total gain of $300, will be considered for the computation of the net operating income. So if a statement of a cash flow is prepared, the gain of $300 will be deducted from the net operating income in the operating activities section, and the total proceeds of $1,500, which is the price that he wants to sell it, will be shown in the investing activities section of the statement of the cash flows. So here we have some example of the adjustments for the non-cash expenses. So here states that the income statement of XYZ company shows a net income of $75,000 for the year ended 31 December 2013. The only non-cash expense reported in the income statement was the depreciation of $2,200. How the XYZ should treat the depreciation expense for preparing the operating activities section using this indirect method? So here the solution. So the depreciation is a non-cash expense, right? That must be added back to the net income because it not affected the cash. As an adjustment to the reconcile net income to the net cash provided or used by operating activities. So the proper presentation is here given below. So states here that the cash flow from the operating activities. So we see here the amount of the net income, which is $75,000. Then here states that the adjustment to reconcile the net income to the net cash provided by operating activities was in the depreciation expense, which has 2,200. So here are some example of the income statement, balance sheet, and cash flow statement under the indirect method. So here shows the XYZ company's income statement, balance sheet, and the cash flows from operating activities, or the cash flow statement. No? So here in the income statement states the revenues and gains and the costs, expenses, and losses of the company. And also in the balance sheet, the company's current assets and company's current liabilities. And in the cash flow statement from the operating activities, it shows the net income and also the adjustments to reconcile the net income to the net cash provided by operating activities, such as the depreciation expense, decrease in interest receivable, increase in accounts payable, increase in interest payable, loss on sale of marketable securities, increase in accounts receivable, increase in inventory, increase in prepaid expenses, decrease in operating expenses payable, and others. And now calculating the net cash provided by operating activities. So the net income plus the adjustments, such as depreciation expenses, which is $80,000, plus the decrease in interest receivable, which is $2,000, plus the increase in accounts payable, which is $30,000, plus the increase in interest payable, which is $14,000, plus the loss on sales of marketable securities, which is $8,000, minus to the increase in accounts receivable, which is $60,000, and minus to the increase in inventory, which is $20,000, minus the increase in prepaid expenses, which is $6,000, minus to the decrease in operating expenses, which is $12,000, minus to the decrease in income tax payable, which is $4,000, and minus to the gain on sale of plant assets, which is $62,000. So we have the total net cash provided by operating activities, which is $100,000. So we have here the solutions, on how to prepare a cash flow from the indirect method, and also preparing adjustments to reconcile the net income to the net cash provided by operating activities. So first, we have here the depreciation expense. So depreciation expense is a non-cash expense that reduces the net income but does not affect the cash. So it is therefore added back to the net income. And depreciation expense is also used to reduce the value of plant, property, and equipment to match its use. And this depreciation expense changes every year. Why? It's because it is multiplied with the beginning value of the asset, which decrease over time due to accumulated depreciation. So here, the value of the depreciation expense, no, to the cash flow statement of XYZ company has the amount of $80,000. That is under to the operating expenses in the income statement of the XYZ company. So number 2, here we have the decrease in interest receivable. So here in the decrease in interest receivable, it is under to the current assets of the balance sheet of XYZ company. So here we should calculate the beginning balance interest receivable of the XYZ company minus to the ending balance interest receivable of the XYZ company. So the beginning balance is 6,000 minus to the ending balance, which is 4,000. So it totals the decrease in interest receivable is $2,000. So next, number 3 is the increase in accounts payable. So here in accounts payable is under the current liabilities on the balance sheet of the XYZ company. So we should also calculate this accounts payable, no, in the beginning balance, which is $122,000 minus to the ending balance, which is $152,000. So we got the total of the increase in accounts payable, which is $30,000. And number 4, the increase in interest payable. So the interest payable is also under to the current liabilities on the balance sheet of XYZ company. Here we should calculate the ending balance, no, which is $44,000 in the balance sheet minus to the opening balance, no, of interest payable, which is $30,000. So $44,000 minus $30,000, we got the total of the increase in interest payable, which is $14,000. So number 5, we have here the loss on sale of marketable securities. So here it is a non-operating loss. It reduces the net income and is therefore added back to the net income to calculate the net cash flows from operating activities. So the sale of marketable securities is an investing activity, and the total cash received from such sale will be included in the investing activity section. Sale of the marketable securities is an investing activity because marketable securities are considered as the purchases or the sales of assets. And also, marketable securities are the financial assets that can be sold or converted to cash within the year. For examples, stocks or bonds, or preferred shares, and etc. And therefore, deducted from net income to calculate the net cash flows from operating activities. The sale of plant assets is an investing activity. So the plant assets are long-term fixed assets that are being used to make or to sell products and also to render services for a company. And also these are assets that are tangible, no? That can be beneficial to a business for more than 1 year. And then it is an investing activities because they are producing sales, no, of their plant assets. So the total sale proceeds will be reported in the investing activity. And number 6, the increase in accounts receivable. So here in the increase in accounts receivable, it is under to the current assets on the balance sheet of the XYZ company. So here we should calculate the ending balance of the accounts receivable, which is $220,000 minus to the beginning balance of the accounts receivable, which is $160,000. So $220,000 minus $160,000. So we got the total of the increase in accounts receivable, which is $60,000. So next, number 7, the increase in inventory. So here, inventory is also under to the current assets on the balance sheet of the XYZ company. So the ending balance of the inventory, which is $200,000 minus to the beginning balance of the inventory, which is $180,000. So $200,000 minus the $180,000, we got the total of the increase in inventory, which is $20,000. So next, number 8, the increase in prepaid expenses. So here, prepaid expenses are under to the current assets on the balance sheet. So we should calculate the ending balance of the prepaid expenses, which is $8,000 minus to the beginning balance of the prepaid expenses, which is $2,000. That is not $6,000 because that's the result of the increase in prepaid expense. So again, I repeat, so $8,000 minus $2,000 is equals to the total of the increase in prepaid expenses, which is $6,000. Then next is number 9, the decrease in operating expenses payable. So this operating expenses payable is also defined as other accrued expenses payable that is under to the current liabilities of the balance sheet of the XYZ company. So operating expenses such as rents, office supplies and equipments, and utilities, and other expenses that are expenses that already incurred but not yet paid, and therefore they are liabilities. So in short, they are accrued. Then here in other accrued expenses payable or operating expenses payable should be calculated by the beginning balance, which is $18,000, minus to the ending balance, no, of the other accrued expenses payable, which is $6,000, and we got the total of the decrease in operating expenses payable, which is $12,000. So we should remember that in the operating expenses, the business operation are being performed, but there's no payment yet. That can be defined as accrued expenses as well. Next, number 10, the decrease in income tax payable. So here, the income tax payable is under the current liabilities on the balance sheet of the XYZ company. So here we should calculate the ending balance, which is $20,000, minus to the beginning balance of the income tax payable, which is $16,000. So we got the total of the decrease in income tax payable, which is $4,000. Then last is number 11, the gain on sale of plant assets. So here says that it is a non-operating gain because plant assets are already owned by a company over years. It increases net income and is therefore deducted from net income to calculate net cash flows from operating activities. So the sale of these plant assets is an investing activity. The total sale proceed will be reported in investing activities. So the gain on sale of plant assets is under to the revenues and gains in the income statement of the XYZ company, which has the amount value of $62,000.